Hello, everybody. I'm Dan Proczko with myPocketMarketing. Thanks for joining us for the first of what I hope will be quite a few conversations regarding the current environment, business, marketing, finance management, etc. Lined up quite a few business leaders and experts to explore some great topics. If you're interested on staying up to date and getting notified about future conversations, you can follow us, My Pocket Marketing, on Facebook, or head over to mypocketmarketing.com/join, and I'll make sure you get emailed notifications about these future conversations. But with me today is Colin Hutchinson of Lendio. How are you, Colin?
Can you hear me?
Yeah, I've got you.
Okay, great. I'm doing well, thank you.
Awesome. So Colin is with Lendio, and Colin is a commercial lending broker. And for those who don't know about Lendio, they are a lending platform that helps connect businesses with lenders. And so they use technology to help speed up the process of getting funding and capital. And actually, to date, I was on the site today, and I'm pretty sure you guys keep that up to date because you're pretty proud of all of this. You've helped fund over 100,000 loans. And those loans were worth over $2 billion. And I thought maybe to start, Colin, you could, for those who don't know about Lendio, kind of introduce us into the platform and how you work with businesses.
Sure. So in the pre-COVID-19 world, we worked with folks who typically would go to their bank for a loan for the business that they've been operating for a few years. And if they were turned down for any reason, maybe they had a bankruptcy 10 years ago, maybe they just had some credit issues, there's something that got in the way of them getting approved for a loan. We have relationships with over 75 lenders across the country. Some of them were very niche focused, say lending just to medical practices or insurance businesses, or maybe they just did equipment financing, or maybe they were just lenders that were looking for more volume and could take on more credit risk, whatever the case might be. So we typically be able to find a lender for a given borrower that might have been turned down by a bank. Wasn't guaranteed, but we were able to do that for a lot of folks and have been able to do that. And so, as you mentioned, from our inception through before COVID-19, we'd funded about $2 billion worth of loans. Now that we're in this COVID-19 world and where we've been working actively on these PPP loans, the acronym for Paycheck Protection Program loans for the CARES Act, we have obtained SBA approval for well in excess of $5 billion. And while we've prided ourselves on speed in the past, it's been anything but quick for a variety of reasons getting these loans funded. I think the last I checked, as of yesterday, we were about almost a third funded of those that we had received SBA approvals for. So we've got a long way to go. And pretty anxious time for us, but more so for the borrowers. So my heart goes out to them because we're trying to do everything we can to get them funded as quickly as we can. One thing that's different from us, from other lenders, is while we were very quick to accept applications and submit them to lenders, and therefore worked with folks who were either turned down or having some kind of trouble with their existing bank or existing lender for the PPP program, the time period from SBA approval to get funding was much slower than a typical bank because we're dealing with a new lender-borrower relationship and lenders who are doing several billions of dollars worth of loans, whereas a lot of local banks, it might have been a little bit slower to get the SBA approval up front, but then a lot quicker on the back end to get funded because they already knew the client, and so the underwriting was a much quicker process. So it's been slower, it's been anxious time, but I very much look forward to getting through it all and getting to the next stages, as I'm sure everyone else is.
Yeah, I know every time we talk, everything I hear about is about how many companies you've been helping and working with. And like you mentioned, there are those the clarity around rules or around procedure and how things were slow at first and have kind of sped up. And even the first round of funding had dried up, and now we're in the second round. Can you maybe talk a bit more about, now that we're in the second round, maybe some advice to businesses that maybe still haven't applied, or if they're still waiting on some level for their institutions, what they should be doing in this time period?
Yeah, so I wouldn't wait any longer if they have any interest in getting a PPP loan. I'd go to their existing bank. I think pretty much every bank that had been turning clients away in the past is now accepting and capable of doing Paycheck Protection Program loans. And so I'd encourage them to go to their existing bank or credit union, try to get something done. And if not, there are a lot of online, they can come through us, but we have a huge backlog. It won't be quick, but there are a lot of options for PPP program loans. They can go to some fintech providers like Bluevine or Cabbage or PayPal. But most likely they'll be funded by their existing banking relationship, bank or credit union. So if they have any hesitation, I'd apply sooner than later, immediately. But some questions, that have come up. There was in the news, a lot of larger companies were getting funded out of the first round. And so there's a lot of backlash around that, and it's been pretty well publicized, like the LA Lakers getting a loan and some large restaurant chains getting loans. Some of whom have offered to give it back, certain billionaires who've refused to give it back. And so the second round, I think there's some deterrence. So a lot of folks who maybe would have applied either didn't, or maybe they were already funded for the first round. And so the average loan size is much, much smaller in the second round of funding, and it's lasted a lot longer. Meaning we were surprised how much or how little had been approved within the first few days. So, my understanding is, as of the close of business yesterday, there was still funding available, so folks can still apply. Some questions that have come up around, well, is this forgive? A lot of folks are treating this as a certainty that it could be converted into a grant and be forgiven, and that's kind of the next phase. Is once they get funded, is it really forgivable, and how will that be determined? For every business, it's different, and I would encourage people to talk to their paid advisors, their CPAs and attorneys. But just to give some context, and what we've learned from the SBA and the guidance they've given is that when you want to measure the time period for when you're spending the loan, it's the 8-week period post the first disbursement of capital. And in that 8-week time period, did you spend it on payroll, interest on mortgage, utilities, or rent? And payroll has to be at least 75%.
Yeah. So if I could, sorry, go on. My bad.
I was gonna say, so then the question that comes up is, well, just mechanically, if you're a business and you have staff, your FTE may fluctuate over the course of the year, just natural turnover, spike in demand for your services. So they might say, well, what's the benchmark date that I have? Is it the average of 2019? Is it some other date? Like what counts as full employment versus not full employment? And so what they're looking at is mid-February. So what was your employment level at February 15th? And it's also not a function of headcount, but rather FTE. So if you had 5 full-time employees, but now you have 10 half-time employees, that counts. They're looking at FTE, not headcount, and they're looking at the time period of February 15th. What was your employment level then? And you have until June 30th to get caught back up. And if you are caught back up in terms of FTE and the same wage level, then you can apply to have your loan forgiven. If you say, don't increase your FTE, but you increase wages. So you say, hey, my payroll expense is the same. That's not good enough. They're, again, looking at FTE. That's the critical factor. And then they want to see that that same level of FTE is getting the same wage rate and not a decrease. So those are the two things to think about. February 15th deadline date, the June 30th day to get caught up, and FTE at the same payroll amount.
Okay, there's
another complicating. I'm going to throw one more date at you.
Okay, more data. We're already complicated and looking to clarify just a little bit of that.
Sure.
Go on. Why don't you throw that out first, and then we'll get to it.
April 26th. So while you have, if after February 15th you started to lay folks off or decrease wages because you saw a slowdown in demand, and then you decided you wanted, okay, I'm going to get this PPP loan, so I'm going to hire people back. That's, you have until June 30th, but you cannot, if you lay someone off after April 26th, so say today's May 7th, and you decide I'm going to lay people off today, hiring them back by June 30th won't matter. You won't, that incremental amount won't be forgiven. They're only your opportunity to rehire people back by June 30th are those that were laid off or had their wages decreased between February 15th and April 26th.
And that's irrelevant of when one applied for PPP and was even approved for funds.
Right.
Okay.
And so that's another complicating factor is people will say, well, okay, it's May 7th. I haven't got my funds yet.
Right.
So, but I can't
operate.
I can't lay people off. I can't decrease wages. I'm in a cash crunch. So then the next thing I would say is all the guidance I've given you is, of course, subject to change. And
right.
It could change next week. It could change the week after, because you have the chambers of commerce and business owners pressing their politicians on the reality that they're facing. And so then the politicians, the legislators have been acting in haste, and kudos for them doing that, because we were facing a problem that was growing in severity very quickly. But because they acted in haste, they couldn't think through every single scenario. So now they're getting feedback from business owners still saying, well, here's where the rules as they stand affect me, and that doesn't seem quite fair. And so it would be fair to think that these rules and the guidance that the SBA gives will change. Can't guarantee it. They might not, but they could.
I know that some of what we're talking about today was actually clarified in FAQ that was released yesterday. And so I can provide a link in the chat to that FAQ with some of the answers to the questions that we're discussing. I want to go back and just clarify a couple pieces or just go back to some of the basics. So you talked about time period of 8 weeks from first dispersal. So can you clarify that piece just a little bit more for us here?
Yeah, sure. So say you applied for a PPP loan on April 15th and you were approved April 17th, and then you were funded, or excuse me, you were approved, after you applied, and then you weren't funded until May 1st. It's on May 1st. It's on that day that the clock starts on the 8-week period.
The 8-week period for using that loan for payroll.
For payroll, rent, utilities. And so you really want to
utilities.
document where you're spending the money.
Okay.
Right? So you get $100,000. How's that? And then over the next 8-week period, did you spend $100,000 on rent, utilities, but most importantly, payroll?
Right.
And another thing, just, I don't know how many, this probably doesn't apply to too many people, but when looking at forgiveness, just as when you're calculating the loan amount for the PPP program, you had to modify anyone who made more than $100,000 to as if they made $100,000, and that's gross cash compensation, not including benefits. Same goes for calculating the loan forgiveness. Is that the payroll amount is, if you're paying someone $200,000, you can only count for having spent $100,000 on that particular individual for payroll. So just keeping that in mind.
Yeah, I think that's a lot of the confusion of the math and all of this and what's going on. The basic rules being 75% on payroll, up to 25% on other elements. And there's a ton of scenarios that I've heard about that I'd love to run by you that might lend some clarity to some of this forgiveness. So we talked about, and you talked about, full-time equivalent. The definition of full-time equivalent is or what counts as full-time equivalent. There are provisions in if you rehire someone but at less than what they were making before, or if you reduce someone's pay along the way, different things happen with the forgiveness. And I wondered if you could share a bit about what does forgiveness look like if we rehire but we can't pay the same rate as we were paying before? Do you know anything about stipulations in that realm?
Right. So my understanding from the SBA guidance that's been issued is that the forgiveness would be commensurately lowered. So
probably based on percentage
decrease in the payroll amount.
Okay.
Yeah. Exact
rules still to come probably at this point.
Yeah,
right?
And that's where, when it comes to each individual business, they're gonna have to work with their CPA on that.
Now, part of what I had been reading was that the spirit of the PPP loans was to rehire your past employees. Is that still the spirit today with the rule changes, that it's meant, like, if you have until June 30th to catch up, is it to rehire your past employees, or is it just to hire anyone back into those positions?
Well, technically it can be anyone. So
Okay.
the spirit might be to bring people back, but if they don't want to come back or can't come back, but then you find someone else, and that's fine too. Or there's another interesting thing is you offer someone the job back and they decline, either because they have another job or because unemployment benefits seem better, whatever the case might be. You can, as long as you document that and you say to the SBA, here's the proof that I offered the job and here's the proof that they declined it. So even if you didn't spend the money on that FTE, you could still have that capital forgiven, that portion of the loan forgiven.
Now, this is an
So
interesting.
that's great news for the employer. It's not so great news for the employee, because as soon as they decline, they're no longer eligible for unemployment benefits, and they take on a serious liability to continue taking unemployment benefits when they've declined returning the opportunity to return to their job.
What counts as proof in this instance? Are there any rules or criteria, requirements for that?
I have businesses talk to their attorneys about that, and I would encourage employees to really be on top of that as well too, because you don't want employees should be, not that employers would do this, but if an employer claimed that they'd offered the job but the employee didn't know, and all of a sudden the employee is told that they're no longer eligible for unemployment benefits, that could pose a real problem. So there needs to be a lot of transparency between the employer and the employee about what's the plan going forward. Are they offered the job back? Are they declining it or accepting it? And really documenting that process. And what counts as an appropriate level of documentation, I really have to defer to an attorney on that.
Right. So I've had some conversations with other colleagues down that point. A lot of the employees that have been furloughed or laid off, whatever the term is that you'd like to use, are now actually making more on unemployment than they were when they were employed. And this whole element of employee rejecting an offer, not being eligible for unemployment, really puts employers and the employee all in a really sticky situation.
Right.
Have you had any conversations with any businesses managers down that route yet?
No, I haven't.
Yeah.
And but I imagine that. So, like I said, that's where employers really want to think strategically about what's best for their business and what's best for their employees and how they want to manage that, and what's the right thing to do. So, in particular, if you're thinking about, say, a restaurant that's shut down, does it make sense to bring people back who can't perform the work? Does it make sense to have the loan? Does it make sense to have the loan to refinance something else? Does it make sense to bring the people back in some capacity for takeout or whatever? And really trying to think strategically about what's the best use of proceeds, and then being careful about documenting what they do so that they remain compliant with SBA guidance.
Okay. Rules around contract employees. Many businesses will go out and contract with 1099 freelancers,
Right.
et cetera. Does that count toward PPP, or is that something on the shoulders of that contract worker?
That's on the contract workers. So,
Okay.
I hear this a lot, the phrase 1099 employees, and that's a contradiction in terms. They're not
Right.
employees.
Right.
So no, they don't qualify for a company's PPP program. They can apply themselves, and many have, but they do not get counted one way. They do not get counted in calculating the loan amount, nor do they get counted on forgiveness. If you spend, that loan on 1099 employees, you've essentially spent it on no one in terms of loan forgiveness. So, and I would caution employers into not using that phrase, my 1099 employees, because that's where the IRS gets really curious about why you're saying that and not withholding wages, et cetera. Really thinking about 1099s as they're independent contractors who operate, as they see fit. They do work for us. We compensate them for their work, but they are on their own. They are independent. They are their own company. They are not employees in any sense.
Okay. So many employers are well into their 8-week period at the moment, and maybe even coming to the last end of it. As I was doing some research for our conversation today, there's a forgiveness phase to these loans. It is not entirely it's not automatic, I guess is what I was getting at. There are documents to be delivered and understood. I'm sure most of that has to be communicated through the actual lender, but are there any documents or any understanding regarding that documentation right now that employers and businesses can start putting together to prepare for this forgiveness phase and application for forgiveness?
So I think borrowers can anticipate each lender is going to have their own unique requirements, just as they did for the underwriting process of the loan. And their requirements are going to be based on advice they get from their own counsel about what they need to get to satisfy having the loan forgiven. So that being said, what is the common level of documentation? I think you're going to want a payroll report from your payroll provider, and any decent payroll provider should be able to document and should be on top of this process, right? Of saying, okay, you've taken out this PPP loan. Here are the wages that would qualify for forgiveness, and making the adjustments for those who make more than 100,000, and demonstrating FTE and wages and how they compare to the every 15th period to now. So really lean on payroll providers to do a good job in providing reporting here, because I know there are some that have been very vocal about their ability to do this. So depend very heavily on that. And then, of course, your IRS Form 941s, those quarterly reports. And it's quarterly, not 8 weeks. But the more documentation you have, the payroll provider report being the most detailed and precise level of documentation that you'll probably be able to provide, and that what lenders will expect you to have.
Okay. Is there anything else that you wanted to add regarding forgiveness of loans or in these final weeks of application as funds still remain, if anybody's still thinking about it, to get on it before we jump into some of the questions that we have?
No, not really. I mean, I would also put out there, apparently the EIDL loans just opened up for, this is a different program, but it's under the CARES Act, opened up for agriculture. So if those in the agricultural field are feeling affected, but unable to apply for EIDL loans, they now can do that. And again, big question is, can I get both? And the answer is yes, so long as the proceeds are used for different purposes. So if you do get both, make sure you use the EIDL loan for non-payroll expenses so that you can document that the PPP loan was used for payroll and then get that loan forgiven. EIDL loan is not forgivable, so you want to use it on non-payroll general operating expenses. But yeah, that's about it.
Okay. I saw that we had a question from Dan Callahan. I'm gonna put this up. If we know the answer, great. If not, point him in the right direction. Okay. So here we have, any word on whether or not the payroll period of 8 weeks is based on a cash payment or when the pay is earned?
That's a great question.
I know that I did share out the FAQ link. You could go through there while Colin is thinking about this answer through there. I know there's also another fact sheet for borrowers that was released by Treasury Department. Could share out as well for you. Colin, any insight onto this one?
I don't. That's a great question. And maybe if I offered it any advice, I'd be shooting from the hip. So I have not seen specific guidance from the SBA on whether it's one or the other.
Okay. And like we said at the beginning, the rules are still changing, are being added, clarified, et cetera. And to be in touch with your current lender provider, your accountants and other lawyers to your business will really help to clarify a lot of this along the way. Anything else to add on that point?
No.
Cool. So trying to look through any other final questions, throw them in the chat. But I really want to thank you, Colin, for coming in and talking a bit more about the forgiveness rules. and the time frames for when these loans are to be used and for what, to help us prepare for this forgiveness period that we're about to move into. Before we end this, Colin, why don't you share a bit more about where they can get in touch with you, learn more about Lendio? Yeah, go from there.
So one final, as you were speaking there, I was thinking of one important detail I'd throw out there. It's caused a lot of anxiety is before the PPP program, anytime you got an SBA loan, from the day you were approved, the lender had 5 days to fund. Then they expanded that to 10 days. Then they expanded that to another 10 days. And this is during the PPP program when things were taking a long time. And they've just reaffirmed that actually it's whenever. They're not forcing lenders to pick a particular date to get it. They're just saying, look, that extra 10 days is a guideline, get it done, but no one's going to be penalized, and SBA approvals are not going to be rescinded. So if you have an SBA approval associated with your loan application, you will get funded. It's just a matter of time. Hang in there, and hopefully we'll get this all behind us soon.
And so we're talking about the SBA number. Like once you have that confirmation, it's after that point where it used to be 5 days, guidance for an extra 10, but it may be longer, but hang in there. Is that what I'm hearing?
Right.
Okay.
Like they don't expire. The lender's not going to get punished, nor will the borrower somehow suffer because any particular time period has lapsed. Once you've got that SBA approval number, it's banks and lenders are just encouraged to move as quickly as they can. And borrowers don't have to worry about that number somehow expiring or going away.
Okay. It's just the headache and the pressure in that time span between getting funded and where you're currently at, which is unfortunate, but those funds are promised. So, all right. Thanks for that clarification. One last question, kind of on a slightly humorous note. How much sleep have you gotten since PPP rolled out, Colin?
It's not volume of, it started out with a lot of processing work, and kind of working through weekend stuff. And then lately it's just been, the application volume has definitely kind of collapsed, but the volume of back and forth communication of trying to get updates, not getting updates, trying to figure out, on our platform, we have several lenders that we work with. So managing communications between different lenders and working through glitches that some might have, having to send documentation more than once. So it's been just a lot of, I guess, busy work of trying to get through the mechanics of getting a loan processed. And for borrowers who don't see it, they just know they've submitted an application or are waiting a long time. I just let them know that, it's being worked on. There are hundreds of thousands of applications that lenders are working through. They're dealing with unprecedented amounts of volume, and with their employees working from home and suffering all the constraints that everyone else is suffering from. It's taking a lot of time, and certainly the lenders don't want to deal with the liability of things going wrong. And so they're trying to be careful and quick as much as they can. So,
which those two don't always go together, but it's good to hear. So where can viewers catching this on the recording or right now get in touch with you and learn more about Lendio? Sure.
Lendio's website, lendio.com, and I kind of own the territory of Western Michigan. So if they just go to lendio.com /local/SW Michigan, there's a microsite for me personally here. And they're free my contact information's on that website, phone, email, and they can reach me that way. And I have an office downtown Kalamazoo, and happy to meet up with folks once we get back to normal here.
All right, thank you so much for your time, Colin, and for sharing your knowledge and expertise in this area. As we started at the beginning, make sure to talk with your accountant, lawyers, and your individual lender for more specific rules and regulations. I know we're still getting a couple of questions late. What I'm going to ask, Colin, I'm going to ask you right on the video here. If you don't mind, we'll answer some of these questions in the chat and or follow up after the fact with many of you on some of these questions. Sound good, Colin?
Perfect. Sounds
okay.
good.
Thank you all for joining. Again, if you'd like to learn more about future conversations and events, head over to mypocketmarketing.com/join, and I'll be sure that you get notified of future conversations. I have 5 or 6 lined up, from service industries to live events, management and finance, and we'll get ourselves squared away for reopening in the coming weeks. Thank you so much for joining me. I'm Dan with My Pocket Marketing. Have a good one.